If you've been paying attention to the news lately, you can be forgiven for feeling a little unsettled. War in the Middle East, oil prices are surging, and the stock market feels like the roller coaster of doom. And if you're approaching retirement, or if you're already retired, you're probably wondering, what does this mean for my retirement savings? After over 30 years working with clients to manage their investments and work toward their retirement, there's something important I want to share with you. The biggest threat to your retirement probably isn't war. It's something much closer to home. The biggest risk to most retirement plans is not geopolitical events. It's how investors react to them. In times like this, I see the same 3 investor mistakes over and over again. And the second one is usually the most damaging. But let's start with the first. Mistake number 1, panic selling. When headlines turn negative, it's natural to feel uneasy. Markets fall, commentators predict the worst, and investors feel like they need to act, so they sell. But of course, markets have experienced wars, recessions, oil shocks, and other crises many times before. And historically, they've recovered. When an investor sells during a period of fear, they lock in losses and usually miss the recovery that follows. Over the years, I've seen investors do more damage to their portfolios during moments of panic than geopolitical events ever did. But interestingly, panic selling isn't the mistake that causes the most damage. The biggest mistake often comes next. I've seen this happen even with thoughtful, intelligent investors, and it usually starts something like this. Maybe we should just wait until things calm down. It sounds sensible, but it's exactly where a lot of retirement plans get knocked off course. Let me show you what I mean. Mistake number 2, waiting for things to settle down. I'll never forget a client during the financial crisis of 2008. The news was grim, markets were falling sharply, fear was everywhere. He was watching the news all day and he was hearing things like, "You think this is bad? Wait till next month, next quarter, next year. It's going to be even worse. Get out while you still have something to get out with." He called and said, "Maybe we should move everything to cash until things calm down." It's a very human reaction. When uncertainty rises, people naturally want safety. The problem is that markets rarely send a clear signal that it's now safe to return. In fact, historically, some of the strongest market gains happen right after the most frightening moments. So investors who step aside waiting for calm usually miss the recovery. And that moment, when someone is waiting for things to calm down, is where a lot of retirement plans lose years of progress. But there's one more mistake that causes problems over time. The third mistake is letting headlines drive your investment decisions. News organizations and social media are designed to capture attention, and fear captures attention better than anything else. War, crisis, collapse, the end of the world. But retirement investing is a long-term journey. Your retirement plan might need to last 20, 30, 40 years. And during that time, the world will experience many alarming events. Wars, oil shocks, political turmoil, pandemics. But historically, markets have continued moving forward despite all of them. The biggest risk isn't that these events occur. It's abandoning a thoughtful plan because of them. The greatest damage done to an investment portfolio usually does not come from the market itself. It comes from decisions made during moments of fear. That's why a retirement strategy isn't just about picking investments. It's about having a strategy you can stick with even when the world feels uncertain. Uncertainty will always exist, but discipline is what carries a retirement plan through it. Now, I'm curious about something. When you see news about global conflicts or market volatility, does it make you feel like you should change something in your portfolio? Or does it reinforce the importance of sticking to your long-term plan? Let me know in the comments below. I read them all, and I'm interested in hearing how you think about it. And for even more perspective on enduring down markets, watch this video next. It's where the conversation continues.